Good morning, students. Today we'll see chapter 1, fourth topic, fourth, fifth, and the sixth topic. Okay, so till now, what we have seen is the introduction of accounting, evolution of accounting, and meaning and definition of accounting. The next topic is accounting cycle, which is again the most important part of accounting process. This is how, or this is the process. Accounting cycle is a process where you will be reading all these topics in detail in the upcoming chapters. Okay, so accounting cycle. It is the step which is involved in the accounting process. So basically there are certain steps which are involved in doing or in preparing the accounts. So for those steps we call it as accounting cycle. Always there should be one starting point and ending point, right? Likewise here we call transaction as the starting point. So in our previous class itself, I explained what is a transaction. A transaction is an activity which is done on the monetary terms, that is, keeping money as the base. Okay, any activity which is done keeping money as the base, then we call it as transaction. For example, selling any product of our organization, so that is where we get money while doing the sale. So it involves money in the activity, so we call it financial transaction. So this is where exactly the accounting cycle starts, and it moves on to journalizing, posting and balancing, preparation of trial balance, preparation of trading account, profit and loss account, and the last step is preparation of the final accounts. In that, balance sheet is the last part. In each and every accounting period, that is 1 year, normally accounting period will be 1 year, that is it starts from April and next and ends in the March. Okay, that is, for example, if we take this year, that is 2020, our accounting period started on 1st April 2020 and it will end on 31st March 2021. Okay, so this period of 1 year is called as accounting period or accounting year. Okay, so here each and every year this accounting cycle will move on. It starts from transaction and ends with the preparation of the final accounts. Last step is the balance sheet. Okay, final accounts, we have totally two steps. One is preparation of trading and profit and loss account. The second step is your preparation of balance sheet. Okay, so balance sheet is the last step in the accounting cycle, and this accounting cycle will be the same, will continue in the next upcoming accounting years also. And one more information which you must know here is, if we have, say, certain asset and liability in a particular accounting year and it closes on 31st March 2021, okay, after on the date of closing, the next day is your next accounting period, that is 1st April 2021. So whatever we have as closing balances on 31st March 2021, the same will be the opening balance for the next accounting period, which starts on 1st April 2021. Okay, let me give you a simple example. Your parents are earning, okay, a certain sum of money. Say for an example, your family has rupees 5,000 at the end of this month. Okay, that is July, right? So July 31st, your family has rupees 1,000 as savings in hand. So next day, anyway, again you will get certain income, that is the next month, 1st of August, you will get certain income for your family. So in that case, with that 5,000, you will add the income whatever you get, right? So you, for an example, if you are earning say rupees 50,000, then already you have 5,000. So 55,000 will be there for running the family for the next month. Okay, so it means the opening balance on 1st August 1st morning, you will have rupees 5,000 in hand, which you saved in the month of July. So July month's closing balance will become the opening balance for the next month. Okay, that is August. The same way, 1 year, one accounting period's closing balance will be the opening balance of the next accounting period. Okay, this is what is accounting cycle. Let me explain you each and every topic now. Number one, identify the transactions and journalizing. So here, as we said, transaction or those activities which involves monetary aspects, that is money. Okay, so whenever any transactions has money as money in that activity, then we call it as transaction, financial transaction. So all the financial transactions are to be recorded, and these are recorded in the form of journal. Okay, so recording of these transactions in the journal is called as journalizing. The process is called as journalizing, and what we do, what we exactly prepare is the journal. And entries are made in the books of original entry, or we call it journals. So journal entries are made as per the chronological order, which is date wise. Okay, say for example, if as I said, your family has 55,000 on 1st of August, you might be paying electricity bill on maybe 3rd of August. So 3rd of August you paid electricity bill. Again 5th of August term fees has been paid. 7th of August EMI has been paid. So according to the date you have to enter your journal entries, right? That's the first topic. Second one is posting and balancing. This is nothing where we have already written journal entries from our transactions. So now each and every journal must be posted into ledger. So posting into the ledger is called as transferring the entries from journal to ledger is called as posting. And while posting into the ledger, each account will be accumulated together. That is, each account will have many number of transactions. All the transactions of the same account will be collated together, will be added, will be got together under one common head. Okay, so after bringing in all the transactions related to a common head, we will find out the difference and write it as the closing balances of that month. Okay, now the third one is the preparation of trial balance. Okay, trial balance is where exactly or the arithmetical accuracy can be checked. That is, whether we have done all the transactions correctly, whether we have written all the journal entries correctly and posted them into ledger and balanced correctly or not. All these can be checked or verified while preparing the trial balance. So that is the most important step, because once we prepare the trial balance, if there are any error, we can immediately rectify it. and this trial balance can be prepared any time during one accounting period. There is no specific time that you have to prepare at the end of accounting period or at the end of each quarter. There is nothing like that. Whenever the organization feels they have to prepare trial balance, they can immediately do so. Okay, so after preparing the trial balance, we will move on to the actual step in accounting, which is preparation of trading, profit and loss, and balance sheet. Okay, here the fourth step is given as preparation of trading account. So first we have done entered the transactions, recorded the transactions. From there we have passed the journal. That process is called journalizing. From journals we posted it into the ledger. That process is called posting. After all the ledger accounts are being prepared, we check the arithmetical accuracy through the trial balance. Okay, after the trial balance, we will prepare trading account where all the direct incomes and direct expenses are recorded. Okay, so from the trial balance we'll pick up the direct expenses and direct incomes. What we call as direct expense and direct income is when a product is being has entered into the organization as a raw material, and where it is being converted into a finished product. So whatever expenses or incomes which are involved in making a raw material into a finished product is called direct expenses and direct incomes. Only these accounts are entered in the trading account. And again you will find out the difference. We call something as debit, we call something as credit. So we'll compare these two. After comparing, you will either get gross profit or gross loss. After finding out gross profit or gross loss, we will move on to the fifth step, which is the preparation of profit and loss account. Again, keeping as your trial balance as the base, you will prepare profit and loss account where all the indirect incomes and indirect expenses are recorded, and also you will take up your gross profit or gross loss which you got in the trading account. So from trading you will take up gross profit or gross loss, either profit or loss only will be there. Okay, from that, with that as the base, you will take up all the accounts from the trial balance, all the indirect accounts, indirect expenses and indirect incomes from the trial balance, and prepare the profit and loss account. The balance which we get from this account will either be net profit or net loss. I'll explain you what is gross profit and gross loss. Okay, if you check your parents' pay slip, you will have something called gross salary, you will have something called net salary. Okay, gross salary is the actual salary of that particular person. Okay, let's take 45,000 is the actual salary. There will be certain deductions in the payment of the salary, that is like DA, HRA, that is dearness allowance, house rent allowance, or if any loan, society loan is being taken, all those deductions will be made. Let's say all the deductions together comes to 10,000. Okay, so 45,000 is your gross salary, that is the actual or the total salary, less deductions whatever I said, rupees 10,000. So you get rupees 35,000, which is your net salary. Likewise, in the trading account, you get gross profit, which is the actual profit. But again, there are certain expenses which are to be met to make the goods sold. Okay, so for that you will be doing certain indirect expenses. So after deducting all these, you get a net profit. Okay, After preparing your trading account and profit and loss account, we'll prepare the balance sheet. Here, balance sheet will have the balances of your asset and liability. Asset is the belongings of the organization. We call belonging here as the properties of the business. Okay, that is, we'll have TV at home, we'll have refrigerator at home, we will have washing machine at home, AC. All these are assets to our family, right? The same way, there are certain assets like, you can take up furniture, plant and machinery, land, buildings. Okay, so all these are assets to the business. Likewise, we will have certain liabilities also. As I said, these are the assets at home, right? Like your refrigerator, television, AC, all such things. You might have bought few things through the EMI, right? You will be paying those EMI month on month. So, which is, you are liable till, that is your, you have to repay until your actual payment is being made, right? So that is your liability. So whatever you got as loan is you're liable for it to pay back the debts. Okay, so that is called as liability. And here, liabilities, you will also include the capital invested in the business. Okay, so after doing all these, you will prepare the balance sheet. While preparing the balance sheet, your asset side must always be equal to the liabilities side. Then only whatever we have done from the transactions till preparation of the balance sheet, your preparation of accounting is perfect. Or else we have done some certain mistakes somewhere, we have to check it. Okay, so after preparing the balance sheet, it comes to an end. Your accounting cycle comes to an end. Always, if an organization is running in a prospective manner, there should be proper profit in the business. Okay, so this is where exactly, that is your preparation of final accounts, is where we can easily know whether the business is progressive or not. That is, whether they are getting ample amount of profit or not. And also, preparation of the balance sheet, that is the final step of the final accounts. Preparation of the balance sheet will show how much worth business are we doing. So these two are the basic things which are to be communicated to all the users or all the people who are involved in the organization. It can be employees, it can be customers, it can be bank or any financial institutions through which we have borrowed, or even the stakeholders, we call shareholders. All the people whoever have invested or whoever is related to the business organization must know the results of the business. That is your profit and loss or balance sheet. Both must be known to all the users of the organization. Okay.